time now for the markets with Leighton. And Leighton, the old saying, big crops get bigger, well, it's accurate this year, isn't it?
It is. The word record still very much in the description for both the U.S. corn and soybean crops. Other stories in the headlines this week: a glut of ethanol from corn may be developing. Tight chicken supplies help boost prices, as the rebuilding process for the nation's cattle herd may be slow. Another month has gone by, but the forecast for the incoming corn and soybean crops isn't changing. Extension Ag economist Brian Williams says these U.S. crops continue to get bigger. He joined me on Thursday morning. Brian, were these reports a market mover or basically confirming what traders already thought?
Well, it was basically a confirmation of what most people had already thought. The numbers came in a little bit lower than some of the pre-report estimates, but they were still real close to the ballpark.
Now, the corn numbers themselves, first of all, obviously a lot bigger than they were a month ago.
Yes, the crop keeps growing for both corn and soybeans. Corn yields were bumped up to 174.2 bushels per acre. That gives us a 14.475 billion bushel crop this year.
But not really any surprise in those numbers. I mean, that's basically kind of where we knew things were going.
No surprises. Really, the only thing that I saw as a potential mover was acres, but there wasn't too big of an adjustment in the acres either.
Now, this record corn crop will obviously mean cheaper feed prices for livestock producers.
It will, and I think that's kind of showing up in this report. They increased the feed use by another 50 million bushels there too, and it's also, I think, reflected in some of the cattle markets and helping to keep those markets strong.
Now, what about the soybean portion of the report?
Well, soybeans, again, no big surprise. Yield, they bumped up to 47.1 bushels per acre. Mississippi's expecting 51 bushels per acre, so another record crop there, and then a total crop of little over 3.9 billion bushels.
Now, going back to corn a minute, stories are out that ethanol production is really declining, and so are prices, but inventories are rising. How is that going to play into the corn picture here long term?
Yeah, there's some concern about the demand on the corn side of things. The margins are real good for ethanol right now, but we're seeing gas prices come down. The big question is where to go with that ethanol. There's a cap of a 10% blend, and so with increased fuel efficiency in our vehicles and our cap on the blend, it really puts a limit on where we can go with the ethanol.
So we'll just have to monitor that as the weeks go by.
Yeah.
As the size of the nation's corn crop continues to grow, so does the pressure on prices. Trader John Roach advises producers to hang on to their corn for now until prices may improve. The problem is there may not be enough grain bins available.
We're going to fill all the storage, and we're going to go into lots of different temporary storage kind of facilities, and so I think it will be a concern. But to the degree that you can, we think you should try to hang on to the crop and look for better prices as we get out of the harvest season.
Not helping the bearish pressure on those corn prices right now is a slowdown in ethanol demand, as we discussed a moment ago, a product made from corn. With less ethanol being used, inventories are now on the rise. According to the government, there's even concern that an ethanol glut could be developing. In the meantime, prices have dropped more than 60 cents per gallon and are said to be at their lowest level in 4 years. Our trivia quiz pertains to the cattle industry this week. Here's the quiz question. What state historically has the highest concentration of feeder cattle? Is the answer A, California, B, Nebraska, C, New York, or D, Texas? I'll tell you at the end of the markets. U.S. chicken supplies remain tight, according to the government's recent chicken and egg and cold storage reports. And J.P. Morgan analyst Ken Goldman says flock rebuilding is moving at a slow pace as well. The net result of all these factors, it appears to be that chicken prices will continue to be strong. Goldman says his firm doesn't believe the pullet flock will begin to grow to any significant degree until the end of this year, or perhaps even early 2015. Rebuilding is also going slow in the cattle sector these days. One thing that is not slow, though, is consumer demand for beef. Analyst Dan Huber says he continues to be astounded about this factor as he surveys the beef sector.
The demand, I mean, I think there's the shocker is we have just not seen the demand slow down. So it's now granted we're past the barbecue season, that tends to slow things up a little bit. So you know that could take the edge off of the upside there right now. But it's but on the same token, it's just. I think this cattle market has astounded us time and time again. Yes, I'd like to think we're probably in that final phase. This is kind of the blow off top, but boy, like I say, it's trapped many a bear this year already to try to believe that.
Investment group Rabobank says Russia's current import ban on beef won't have much impact on the strong demand or record prices. The group's third quarter report states that global beef supplies remain tight and that prices may even be pushed higher. Brazil is expected to gain the most from the Russian ban, but again, the impact on the United States is expected to be minimal. Before our new feature story, let's check out the trivia answer for this week. The correct choice is D. The Texas Panhandle historically has the nation's highest feeder cattle concentration.